Mr. Chairman,
recognized to
thank
inquire.
you, and thank you. I think the testimony that each of you offered is important as we craft this legislation. Since the most ringing endorsement for my proposal with Senator Levin joining Secretary Geithner and Senator Obama endorsing that proposal was from you, Professor Aviona, I want to direct most of my questions to you. One thing we haven't really explored fully yet in the hearing that I think is important, the immense dimensions of the problem we're dealing with. And you addressed this in your written testimony, but do I understand that the best estimates are that about $1.5 trillion is kept offshore by U.S. residents?
That is an estimate that was done by the Boston Consulting Group and Merrill Lynch some 6 years ago, so it's not up to date.
So it's a very conservative estimate. 6 years ago, Merrill Lynch estimates $1.5 trillion offshore by U.S. residents. Is that individuals only or corporations as well?
This is high net worth individuals.
All right.
So it's not corporations.
And your conservative analysis using that data and other studies is that what we're talking about for individuals only, not corporations, is $50 billion of tax evasion every year.
Yeah, I mean, this is conservative because what I did was simply take the $1.5 trillion, assume 10%, income on that, which seems reasonable. So that's $150 billion, and then apply the U.S. tax rate. So that's about $50 billion. But that assumes that the $1.5 trillion are all after-tax income, that this was subject to tax already. If it was somehow earned overseas, transferred, to Switzerland or the Caymans and never disclosed, then part of the $1.5 trillion principle is also
exactly. And I think that is why Senator Carl Levin, has estimated that when you add in the corporations to these individuals and recognize that data that we're using is 6 years old, that the amount may be $100 to $150 billion every year that is lost in tax evasion.
The truth is that nobody knows. I mean, there's a whole range of
It's hard to get a precise number, but what we do know is that it's big. It's very big. And my reaction, and I think the reaction of that firefighter or that police officer or that small business on Main Street in Bastrop, Texas, is that if there's that much tax evasion, we don't just need a sledgehammer, we need something bigger than that, because it's very unfair. It does strike the fundamental fairness, as the Commissioner of the Internal Revenue Service said. Now let me ask you as well, while your testimony has focused on individuals, we know that with the click of a mouse, an individual can become a corporation. And that's one of the ways, as several of you mentioned, through hiding behind corporations, that individuals can dodge their tax liability. It is also particularly galling, I think, that some of the biggest recipients of taxpayer money in the bailout that has occurred over the last few months, Morgan Stanley, 158 of these subsidiaries. Citigroup, 90 of these offshore tax-dodging entities. Bank of America, 59. Now that doesn't compete with the over 300 that Enron had before it failed, but it's a very significant amount of use of these international tax subsidiaries to dodge taxes. Let me ask you if you agree that there is a serious problem not just for individuals but for corporations using foreign subsidiaries to dodge their tax responsibilities, which my business on Main Street in Bastrop or Lockhart or Smithville cannot do.
Well, there is a difference that I do want to draw between things that are clearly illegal, tax evasion, and things that are tax avoidance using legal loopholes. I think what most corporations, certainly the ones that you mentioned, do is not illegally hide their taxes. I mean, as was mentioned before, there are rules in the codes that said that any foreign corporation that owned by an American over certain thresholds subjects that American to taxes in one way or another.
Well, I couldn't agree with you more. It's not only what's illegal, but what's legal that should not be legal, because it's inequitable to businesses here in the United States. While most of the questions that you have received this morning have been about the blacklist portion, as it is termed, of the Stop Tax Haven bill, I want to ask you about another very important part of it that relates to corporations. One of the provisions of the bill is to treat a corporation that is incorporated abroad as a domestic United States corporation if substantially all the executive officers and senior management are located primarily here in the United States. I think this is an important provision to restore tax fairness by recognizing that if you have a shell corporation abroad and it's really a United States company, that just having a paper certificate and a sunny tax haven is not enough to make you foreign. Do you agree that this type of provision is needed to restore tax equity by not letting corporations play these type of illegitimate games to avoid taxes?
Yeah, I personally think that this is a very good improvement on existing law. I first made this suggestion back in 2001 in response to the so-called inversion transaction when American corporations set up shell parent corporations in Bermuda without changing anything in terms of the actual place of management control of the corporation. And this was then endorsed by the Joint Committee on Taxation as one of their options of reforming the law. Most countries in the world have some kind of management control standard, and I think under the limitations that are in the bill, this is a very sensible provision that will add greatly to the enforcement of our tax laws.
Thank you, Mr. Chairman.